Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It's April 22nd. This will be our chart lesson for the day, and you guys are going to get have plenty to watch today. Yesterday's video didn't upload till today. Then I took a trade this morning, and I've recorded it and I uploaded that just to show you how I trade a range day. So you got that, and now I'm going to upload this video. So it's going to be 3 videos for the day. Um, Somebody wrote to me and said it seemed like Groundhog Day today or yesterday when the video didn't upload again. And I think I've finally figured out what's happening. You can set a video to load at a later date. And if I do it before 5, I usually set it not to upload until 5 or 5:30. And so that's what I've been doing the last couple of days. I've been doing that for a couple of weeks, but it's it's worked flawlessly. But either there's a bug in it now or they've changed something, because if you set it to upload at a certain time on the same day, it seems to not go public. It only goes public the follow the it will only go public if you upload it the following day. So I don't know if it's a bug because it was working. I'm not doing anything different, but just so you know, if you've never uploaded a video to YouTube, it used to be simple. You just upload your video and there it is. Well, now they make you, there's literally five screens that you go through before you can upload your video, and they got all these boxes, all these questions. Are there kids? Is there profanity? Uh, is there nudity? Is it kid related? Is it adult related? I mean, it's ridiculous what you have to go through. And I don't know what the deal is with YouTube. I think they've had some lawsuits, or maybe some of their advertisers have complained. I know that I've heard of a lot of people that really count on making their living off YouTube, losing all their income and stuff. So I don't know. I don't keep up with it that much. I don't do these videos. I don't make any money off these videos. It's peanuts, really. So I don't really care. I just want to get the video uploaded because this is the best place to do it. So, but they've made it extremely, extremely difficult. And why, I don't know the answers to that. But anyway, I hope I have it solved and that you get to see all 3 videos today, and you see this one today and not tomorrow. So we don't have the same thing going on tomorrow. But I apologize. But something's changed. Either there's a bug in their system or they changed it in the last couple of days. So because I'm not doing anything different, I'm still checking all the boxes. Yesterday I double checked that I had public versus private, and so I know it wasn't the wrong box checked. For some reason, it seems like now if you and I tested it again today on the trade example that I posted, and it didn't go live either. Once it went live, it was private. So the only thing I can think of is you can't do it on the same day. You have to pick the following day. If it doesn't work the following day, then there's a bug. But I'm never going to set one to automatically post the next day, I don't think, anyway. So going forward, I will just make my videos live the minute I make them, the minute I upload them. So I won't try to make them do it a certain. I want to try to get them at a certain time every day, so everybody kind of knows what time. But my days are so crazy. I don't know what time I'm gonna get through trading. I don't know what kind of other interruptions I'm gonna have in the day. So I'll try to post it by 5:30 or 6, somewhere between 5:30 and 6:30 or 7 every day, and that's the best I can do. And if you haven't subscribed, go ahead and subscribe and hit the little bell where it tells you, so you'll get a notification when the video does go live, and that way you don't have to keep coming back and checking and all that stuff. So anyway, I hope that's clear, and I apologize for the snafu the last couple of days, but it's just, that's the way it goes. So anyway, we've already talked 4 minutes here. I'm going to do this a little different today. I have all the trades on here. I also wanted to show you another chart. I uploaded a micro ES chart today and played around with it, and I ended up coming to, you can take a look at this chart just so you can see it real closely. You got the 2-tiered channel up, then you just kind of you got a little bit of a channel working down here. It didn't really hold. This is where it would be confirmed, and it looked like it was going to confirm, but it ended up breaking and going higher. Really what we was going on here is we were just in a range. But you have to put this on here and be aware of it just in case. But I want to show you take a look at that one, look real closely at it. And this is the micro ES. And you can see we got the two-tiered channel coming up. You got the one going down. We really pretty much went sideways, two measured legs up, and then there's your one going up. So 950 ticks looks like it. I mean, that looks very similar to my other chart. You can see it there. Again, if I take it off, here's the other chart. I wish I could put them both up there together, but I really can't make it happen. Let me do this. Let me make this one a little smaller so you can see more of the afternoon stuff. So there you can see the whole chart, and make sure you notice these lines. That's where the day starts and that's where the day ends, and I'm going to talk about that next. Oops. But there's that chart again, and here's the MES again, and you can see they look almost, they're very much alike. Very much alike. So you get your little break here on this two-tiered channel. It never really confirms this trend line, but you know this is correct. You just don't really get a confirmed trend line, but you get a break and you move to a new high and then you sell off. But really what happened here is we just went sideways, and then once we broke higher, just look for a measured move up. There's your first half of the range. There it is. We got that to a T on this. Is actually the MES, and then it shot up there and then sold off. I don't think the move up was quite that dramatic on this one. You still see we got it here, and then we sold off. Same thing, the measured move up. So I think you can trade either one of these. The question is on the MES, my only concern with it is I haven't traded it yet, but just looking at the chart, it charts well. I think it'll trade just like the ES for the most part. But that I'm using, like, again, I'm using a 950 tick. Your broker might be slightly different, so don't be afraid to tweak it 50 or 100 ticks on either side if you need to get to make it look right. But I'm comfortable with that. The only thing I'm not sure I'm comfortable with, since I haven't traded it, is there any slippage? For any of you guys that are live trading it, are you getting any slippage? If you are, then I'm not too crazy about trading it. My guess is with the volatility the way it is right now, slippage is not going to be a problem. However, when we kind of get back to normal again, which at some point this market will go back to normal. Today was almost a more normal looking day, not a lot of volume today. You can see how many fewer bars what we have been getting. So it's a little bit different day. I don't know why this line's right here. That has something to do with my trading time. There must be some little glitch in there. Every once in a while it'll do that. But here's your close and your open, and I wanted to talk about that. But just wrapping up the MES, if any of you are trading it, put in the comments if you're having any slippage, if you're trading it live, because you won't get any slippage on the simulator. It'll give you regular, it'll give you the regular feels based on, well, I guess you could get some slippage too, because it does base it on if you're trading live data, you could get slippage, I guess, too, even on the simulator. So if you're trading it even sim or either, if you don't mind putting a little message in there, just drop one in there. So in the comments and say, hey, yeah, I'm trading it, and yeah, I've had some slippage, very rare or whatever, or yeah, I'm having slippage on every trade, or just whatever just some quick comments so others can find out. So but yeah, back to these two lines. Make sure you understand this. I made the comment that you always start your trends in the current day's price action, and somebody got confused and didn't realize you counted the overnight stuff. From this line to this line is today's trading, and this starts at where it opens at 3:30 yesterday afternoon, and this is where it closed at 3:15 today. So that's one trading day. So yes, use this stuff in the blue over here as current day price action. So I hope that's clear, because obviously it wasn't clear for at least one person because they asked me. Another thing that's come up that's, I think somebody was confused. Somebody had asked me about sim trading. I read the email the other day about somebody taking 10 trades in an hour or something and having 10 wins, and I never thought about this till the guy asked me about it. And so just to clarify for everybody, in case there's anybody else that has that question, when you're sim trading trying to learn, you're going to be limited how much you can trade, especially if you're doing this part-time and you got a job or whatever. So whenever you can trade, every trade you see that you think meets our criteria and is a good setup, when you're just sim trading to learn, take those trades. Don't sit here and try to find 2 or 3 trades a day to sim trade when you're sim trading, because you're trying to learn. So every trade, don't just take every trade that comes, everything that, don't throw darts at a board, in other words. But if you see a trade, it comes to the key entry point, you get a good setup, just take it. Take them all. That way, because really how you learn is taking the trades and then study them at the end of the day. So you need to get as much screen time, as much trading practice, and as much study of your trades and your chart as you can. So now once you think you've got this down and you're sim trading, trying to double your sim account so you can go live, well, then you can be more picky. That's when you would probably trade just like you would when you're live, and you would want to try to find your 2 or 3 trades every day and meet your goal and then close up and probably go home. But don't do that while you're learning. Take every trade you see. If you saw every one of these trades I marked here that are blue or red, take them. And you might even take some of the green ones if you're wanting to do some of the aggressive stuff too. So, because that's how you learn. So don't be afraid to take trades when you're sim trading. Like I said, don't just throw darts at a board and be chasing. I mean, that defeats the purpose. But at the same time, don't hold yourself back not taking enough trades because you're trying to do the right thing. So I hope that's clear. Okay, another thing that's come up, at least 2 or 3 people have mentioned this in the last day or two, is there is an indicator that will mark the swing highs and swing lows for you. I don't know what the name of it is. I want to say there's several of them because I've seen them. People have shown them to me in the past. If you're having a hard time identifying swing highs and swing lows, by all means, you can use that indicator. I'm always hesitant to recommend indicators because people start to rely on them and they, then just crazy things happen. So I don't want you using any indicator you don't have to. But if you're having a hard time finding these swing highs, just like right here, there's a swing low, then you run up and there's a swing high right here, then it comes down, then it comes back up, there's a swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low. So if you're having a hard time identifying that, which that should be pretty straightforward, but some people, if you're new to this and not used to it, you might have a hard time identifying that. And if you do, by all means, put one of those indicators on there that marks your swing high and swing low. It'll probably be helpful for you. As soon as you figure it out, though, take the stinking thing off and don't leave it on there anymore. Okay. Another person asked me about the target technique. And if you look in our targets manual, you'll see me teach to find for this next target up here, instead of drawing the line like so and measuring the leg and bringing it over, I teach it a little bit different in the manual and in our targets manual. In the manual, but that manual was really back when there was time-based charts. So on time-based charts, you can measure it from swing high to swing, or swing low to swing low, and then move it up. But notice it gives you the same exact target. So you can use either one of them. But if you're using tick charts, it's just easier to do it the way I'm doing it right here. But if you are using a time-based chart, the beauty of doing it this way is not only is this into this arrow are going to mark the price that is your target. It's going to tell you about the right time it's going to get there. And then you'll know by right here that you hadn't got there, that you're going to be late. And a lot of times if you're late, it won't get there and it'll reverse. So there's some beauty there to how you do it on the time-based charts, but we don't trade time-based charts, so we don't need all that. So it's just easier to draw the line this way, move it over here, and again, you get the same target. It's just the other one shows you a time period, but the time doesn't work out properly on tick charts. So just forget it for tick charts, in other words. Okay, and another person asked me a question today that really made me think for a moment, and I wanted to discuss this. His question was, so when you're searching for a trade, are you just searching for signal bars at every turn? And when I read that, I almost cringed, because that is exactly what we don't do. The idea is to be patient and wait on, what are we waiting on? Say it with me. We're waiting on key entry points. I know most of you can say that, and some of you can say that and you still won't do it, but we're waiting on something to happen at a key entry point. We aren't looking for signal bars at all at that point. We're looking for the key entry points. Where are the key entry points today? The trend line, basically the support and resistance, and that's horizontal support and resistance, which really was what we were looking at most of the afternoon, but it's also the trend line. All a trend line is slanted support and resistance, so it's key entry points. So on this trend line coming up, we're looking for, plus you got a midline here, so you might get a setup on the midline, but remember, before you trust a midline, you want to see it holding multiple times, just like you would on this support across here. Before you trust buying directly off that, with the first touch of with a good signal bar, you want to see it proven a few times, like it was here. So, and then up here you had to see it proven. I never got a good setup to the short side except that one that I took. So, but yeah, you're not looking for signal bars at all. You're looking for prices to come back to these key entry points. Then you're looking for a setup. And if you get a setup, which is a second entry or a failed breakout off these lows, you might be looking for a higher low that's still close to the support line, or you might be looking for a lower high up here off the resistance line. So you might be looking for a trap down here that traps people to the short side, which is really usually what happens on breakouts. They trap people. But yeah, you're looking for the setups at these key entry points. Once you see the setup, then you're looking for a signal bar. And all we care about with a signal bar, if we're going long, is it bullish? If we're going short, is it bearish? If it's neutral or anything but bullish on a long or bearish on a short, then it's suspect. And let me make sure I clarify what I mean by bullish or bearish. Some people get thinking that the bar has to be green. Well, a bar can be bullish without being green at all. Let me see if I can find you one. Or bearish without being red. Now that's a great rare signal bar. I marked it black because I'll explain that one later if we get to that trade. But let me find you a good, that is a bullish bar. It's barely got any green at all, but that's still, look how big that bar is. That bar is 12 ticks, and it closes maybe 3 or 4 ticks off of its high. So that's a bullish bar, even though it doesn't have much green. So make sure you understand that. Find a bearish bar. Now see that bar right there? That bar has red in it, but that's a neutral bar. That bar has green in it, but it's a neutral bar. The prices are closing in the middle. Look at the stems on both sides. So make sure you understand there's a perfect doji, very neutral bar. Here's another bar. It looks like a doji, but that's more and it's got red, but it's more bullish than anything because it closes almost on its high. That's a fairly, I mean, that's not a great bullish bar, but it's a fairly bullish bar. It's good enough on a second entry on coming off the low of support. So that's a great example. Here's a neutral bar. That one's mostly bullish. That one's mostly bearish. There's another neutral one. Very neutral. That right there, even though it has red, it's all you see. That's a bullish bar. It closes almost on its very high. So make sure you understand that too. Just so many little intricacies that people get all hung up on and confused about that just mess you up. So make sure you understand what a bullish bar is. A bullish bar is a bar that closes almost on, bullishly. It doesn't have to have a green body at all. I wish I could find one that didn't have any body at all that was super. There's one. Well, there's one right there. If that bar would have closed one tick higher, it wouldn't have any green at all, but it would have closed on its very high. What happened was it opened right here and traded down, and then it traded all the way back to its open, and then traded a little higher than that and closed. So that's what makes it look like that. But another thing too is you want to make sure that when we use a bar for our entry, we use the whole bar, including the stems. So many people are trying to trade with the bodies. The only time I care about the body is when I'm drawing the trend line, and we've talked about that before. So when it comes to a break higher than a bar, the stem is part of the bar. So prices have to break above that stem too. So if you went long right here, your stop goes one tick above the very high of the bar, including the stem, and you won't get triggered into it unless that breaks higher. Right here, prices could have made a double top and not broken higher, but you wouldn't have got a second entry right there. Notice that high, first entry, second entry. So it had to break above the whole bar, including the stem. Same thing coming down. There's a little bit of stem right there. It had to break below that stem to trigger a break below that. So make sure you understand that. Okay, here's a good example of that. This trader sent me his chart today, wanted me to look at a few of his trades, and he found this trade right here, but he says second entry signal bar, neutral bar, bottom trend line, and bottom range. I'm not sure what he means there, but he called that a neutral bar. I don't know if y'all can see that. Let me see if I can make it a little bigger. But that is a bullish bar. It doesn't have any body at all, but it closed almost on its high. That's a bullish bar. It traded way down here and then traded back up. What happened was it opened right there, traded all the way down, and then traded even past that, but it backed up a little to where it opened. That's still a bullish bar. If it would have closed in the middle, it would have been neutral. Or if it had closed up below the middle, it would have been more bearish. There's a perfect neutral bar right there. It's got a bearish body, but it's still neutral. So I hope that's clear. That's the reason I brought this up. Here's another one. Did not take this second entry long. It's neutral and in a small range. So I think he thought that bar was neutral. That's a super bullish bar right there. You are right into resistance, so you were very smart not to take it. But I want to make sure this gentleman understands what a bullish bar, a neutral bar, and a bearish bar are, because he's definitely got a little bit of a mix-up there. Okay, this trader sent me his chart. He actually saw a move down first entry, move down second entry long, but then he went short on the second entry. Now you could have maybe said, hey, I'm looking at that as a failed second entry, but I think he's just not realizing that if you're going short, you count off the lows, your second entries. So if you're going long, you count off the highs. So if you were going to go long right here, this would have been your second entry. Notice you're moving down and you broke higher right here. That's a first entry. And then it kept correcting again. So the next time it breaks above a bar, which is right here, that's your second entry. So one tick above this bar, that's your signal bar. It's not a good trade, so you wouldn't want to go long there, but I'm just saying. But he went short, and he went short right here So you just made a new low. So you're going short on a new low right into support. And then it failed, and then he had his stop one tick above that. And so he went short right there, thinking that was a second entry. So you might have looked at it as a failed second entry, but it's not a second entry. So I hope that's clear. There's no trade here at all. Look how you got 1, 2, 3, 4, 5, 6, 7 bars stacked up really side by side there. Definitely those 5 or 6. That's just a little small trading range. And what happens when prices break out of a trading range? They fail. Look what happened. You broke out and it failed, went back to the top, failed, went back to the bottom, failed, went back to the top, failed. You're just breaking, you'll just get chopped all to pieces trying to trade that. Just stay out of that. The only trade might be a long off these lows down here. Notice if you'd have went long right there, that's not your signal bar. This is, because it made the low. But even if you'd have went long right there, you'd have had a winner. And if you'd have went short up here off the resistance, you might have had a winner there. Even on the lower high, but it's kind of right in the middle of what you're marking as your range. I can't see enough of your chart to see if you're reading it right or not, but I can tell you there's no trade there in any direction. You might have gotten tricked into going long right there. And if you did, you would have got stopped out real quickly. But there's no trade there, period. So, because those make a matching low, so you could use that for a signal bar, but you don't want to use inside bars like that. I mean, that's just not a very good setup. So I hope that one's clear. Here's another chart somebody sent me today. Notice you made a new low. He sees that, counts 0, then first entry, and then second entry when it broke below that bar. And he says right here, not a great signal bar, but at key resistance. I mean, that bar is mostly bearish. I don't know how well you can see that bar. But look at all that stem up there, and it closed down in its bottom half, 2/3. But it's not a great setup, but I wouldn't be afraid to take that off a key entry point. Not a second entry with mostly bearish, turn it down like that. If it breaks lower there, it's at least probably coming back to the EMA. So then his second question was if that was a new low. And it is, because there's your swing. Notice you made a higher low. So that's a swing low. Wasn't much of one, but it was. So your count's 0 right here. So first entry, and then you run up, and second entry. And there's you another second entry right at the key entry point with a huge bearish bar. Definitely take that one, and look at that thing go. So he actually took that one, so great trade. What it says right here. But he wasn't sure if it was a second entry. So yes, very good. That's a second entry. That's how you count them. Good eye noticing, because you got to know, you got to be paying attention to notice that you made a little bit higher low than right there. So that's a swing low, because prices corrected and went up from there and made a low point. And it didn't last very long. We went on down and made a more important low here, and that one worked out great. Okay, this trader asked me about this long right here. And yeah, you've got a trend line working up here, and this is bouncing off of it. But again, look how we're going sideways. Look how all those bars, 1, 2, 3, 4, 5, 6, and they're just side by side. What is that? That's a small range. So even if you got a good setup right there, I mean, if this was a really strong trend and resistance wasn't running all across there, you might take that trade. I might mark it green, because it is a failed second entry short too. But look at all that. You never want to go long into that. Look how every time prices turned up there, even if they broke higher, they failed instantly. You can't go long into that, because if you get lucky and it's one of those times that pushes up, you might get your scalp, but it's probably going to turn. You should probably be looking for shorts off that. We're in a range by now, by this point. Of course, pay attention to that and maybe don't go short into that, but don't be going long right there. So I hope that's clear. Can everybody see that? You cannot go long into all that resistance, because you've proven over every time it comes up there, prices either turn down instantly or they break through a little bit and fail. The chart's already shown you don't go long there. You got to read the chart. That's what it's telling you. It's telling you clearly, do not go long right here, because if you do, I'm going to burn you and take your money and go the other way. It did it every time. Count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We'll consider that one went through, so we've got 12, 13, 14, 15, 16. We'll consider that one went through. 17, 18, 19. You've had 19 bars turn up and turn down right there. That's telling you something. Pay attention to it. Okay, this comes up every now and then. I talked about this the other day. A trader sent me this, and he said I was counting my second entries and two legs different than the day one guys. And I'll just be honest with you, if you're going to trust anybody, I'd trust me before I'd trust those guys. So I'm just going to leave it at that. But he didn't understand what was going on here. He's missing. There's a small nuance here you have to be aware of. Notice your price is made a new low, so your count's 0. That's correct. And you're working up, and prices break lower right there. So there's your first entry. But on this next bar, you make an even, you got a little 2-bar matching low. So that's still a correction. Prices didn't make another low. So it's still considered a correction. It's not a great second entry, but it's still a second entry. Because when prices broke below those 2 matching lows, that's a second entry short. Now that's not a new low point that you're going to count your counts over something, because somebody posted a note in the video the other day that I was one point I called that a new high, and another point I called it, said it wasn't. And this is different when it happens like this versus, let me find another one that's like, I'll have to find another example of it. But when you're just working down in a downtrend all the way down, and like right here, that's not a new swing high. Yeah, you could count that as a correction, but it's not a new swing high. This is a swing high with 2 well, no, because that one's higher. If this was the very high right there, that would be a swing high. And if you saw this all the way down at the very low, that's a swing low. But you don't count it like that. It does count as a correction, though, in a downtrend, because it didn't make another. Notice how you got another one right here, so you could count that. It really didn't back up at all, so I wouldn't really count that one. But notice here, prices open beside it were trading again higher and then went down. So that's still considered a second entry. It's not ideal, but it's still a second entry in a downtrend. And you know, if you with that good of a signal bar, if you liked everything else, yeah, you want to go short there. This is just an example of second entries, and I wanted to show one like that. This came out of the manual, I believe. So I hope that's clear. But he also sent me another chart. This is the other one he sent me. And he said, this is how day one traders count it. Well, this would be the same in my chart on mine too. There's your new high, first entry, then you're coming down. There's a second entry long right there with the uptrend. And here you made a new low, first entry, second entry. So those are correct. They're just like ours. The only difference was we made a 2-bar matching low on that other. That little 2-bar matching low right there was the only reason that was a second entry. If we would have ticked lower right there and kept going down, there's no second entry there. But that's a correction, and that's all you need before. So notice you're moving up and you turn down, and you should have kept going lower on each bar. But when you didn't and made that equal high, that's a correction. So when you break low, you can count that as a second entry, because you had a little correction there and then went lower again, even though it didn't break higher. Generally, on a good second entry, you want it to you would want it to break higher right there and then make a higher low and then break below it. Then it would make more sense. So this is just a little more advanced second entry type. So don't get confused on that. And yeah, those guys over there tell you something and it's different what I'm telling you, I'll tell you who to believe. I hope I don't have to tell you who to believe. Believe me. Okay, here's another important point that a trader sent me. He had this downtrend working down. So the trend's really down here. So you're looking for shorts. You got a lot of support across there, so you could look for buys. I actually like going long right there. But anyway, notice that he's only got 2 touches of his trend line up here. So this trend line hasn't been confirmed. It needs a 3rd touch. And I drew the white stuff on here. His chart had everything else. I drew the white. But he went short right up here on us. There is a 2nd entry short right here. Let me make this bigger. That's almost impossible to see. I'm sorry. I couldn't even see it, so I know you guys can't see it. We're going to make it where you can see it. That might be a little too big. Okay, I think we can see it now. So when prices came back up here, he should be expecting a possible short. That's for sure. And notice you're working up and you got a 1st entry, and then you're working up and you got a 2nd entry right there. And it just went 1 tick lower, turned and went up the other way. Finally hit the trend line, and then it turned down, and then it turned back up and took off. So it never really confirmed a trend line that you could follow through on. So the only confirmed trend line you had was this one working up. So you had to wait and see what happened right here. So, and notice how everything's still crawling up that trend line, and you're actually going short right into it. You're a little ways away from the EMA, which gives you a little advantage. But as you can see, you might still be a tad early. So, but there's another clue. Notice this big circle down here. Notice how we were coming off that trend line every time, or this trend channel line. Notice here you didn't get to it. So there's suddenly that tells you that the market lost a little momentum to the downside. And then look how it shoots straight up. Look how strong that's all one move up. The market went right through the EMA. It didn't even really hesitate much there. Went right on through the EMA. It went past that high. It actually didn't get past that one yet, but it went past the last high. So the market's showing a lot more strength than it had been showing. So you better wait on a good setup here. I'd at least want a lower high, or something like that right there, without that trend line being confirmed. Now, if this was a confirmed trend line and we turned down off of it at least 3 times, and this was a 4th or 5th time back, and we made it all the way down here, and there were 2 clear legs with a nice correction in here, but that's all one bullish move up. Even though you had a little correction there, it ain't much. And so you had the right idea looking for short there. I would have been sitting here doing exactly what you're doing, saying, okay, now I got to wait, but I got to wait and see, do I get a setup here? Because is this trend line going to hold or no? And then suddenly it does hold, but you don't look at the signal bar. You don't want to go short on that signal bar, so that's telling you to stay out of another short right there. And then wait and see if maybe you get a lower high, and you just never get that. You might say, okay, this is a lower high, but that's a bullish bar. And you would have got trapped there again if you went short, and it just keeps going high. What really happened is you got a little slanted trend right there. Look how I did it on this chart. Notice it shoots up. This is the same place, right? Or actually, no, this is it right here, I guess. This chart's, my chart's a little, I was thinking it was right here, but I guess it was right here. Notice I got a couple of touches off my trend line. So it's trend, you know, even though you basically got the same price action, it's a little different. But notice you couldn't go short on, even though you had a lower high here off mine. Notice what's happening there. You're just going sideways. It's just congestion. I think that's the same spot. Actually, I think this is, I don't know. Anyway, it's hard to find it on the same, when you send me a chart with no times and stuff, it's hard sometimes for me to figure it out. I was thinking it was this spot right here, but it couldn't be there. That's what I was thinking of, because notice how that shoots up and then kind of goes in a little, it's like a spiking channel. So, and then one last chart here. This gentleman asked me about this long right here. Notice that's a 2nd entry. We are really going sideways, and there's a range here, and so that's like a little failed break lower below that support. So on a second entry with a nice bullish bar, it's kind of hard to see it, but I think that's a bullish bar in there. I wouldn't be afraid to go long there. There's some things to be concerned about, but since you're in a range, normally if this was trending and we'd turned down off that EMA and we'd already had a few pushes through like this, I'd probably be a little concerned about that. But you can see how flat that EMA is, and we're swinging back and forth. And we swung way above it, now we swung way below it, and that's a little trap. It bounced once, really where there was some previous support right across there, and then it gave you a second entry on a little short trap, and then it went higher. So that's not a bad entry. I might make that aggressive with a green, but these are the kind of trades you often catch an important low if it's off the bottoms and an important high if it's off the top. So I like to take those trades. Okay, we're at 40 minutes, 41 minutes actually. Here's the trades. I'm going to back out just a little and I'm going to walk through them super quick and describe them all, but I'm not going to spend much time. So, okay, 7 o'clock came way over here, and I didn't see anything I liked over here. There's a second entry short right here. I don't think it was quite 7 o'clock, but if you were here and you had a good signal bar, you might ride that back to the trend line. But we're in an uptrend here, but you can see it first entry, second entry, and you got one leg and you're not back to the trend line, so you're probably going to at least come back to the trend line. Notice how we came up short up there and then we overshot it here. But anyway, I don't see, you'd have to chase the market to enter any of these. You definitely don't want to enter into that resistance there. I showed you why before earlier today. And then we just started going sideways. You can't enter in there except we got to go to range rules right here, basically. And it's so tight, you probably better off to stay out of it until you get that failed breakout. Now you got plenty of room back to the EMA on a failed breakout of a range. What's probably going to happen is it's going to snap back. And look how bearish that bar is. So it's aggressive because you're taking a short, but you did have a break and a new high already. So I wouldn't be afraid to take that trade, but understand it's aggressive. You'd probably be better off to see if you got a lower high and then a chance to get back there. Then guess what? It runs straight out the bottom side. So what's probably going to happen? It's going to snap back. Look at that nice bullish bar. There's you another long. Then you touch the high again. Touch the high again. You run down and you run all the way to the low again. And you get a second entry long, and that's a bullish bar. It doesn't look like it. It's almost back to the middle. So that's concerning a little bit. But this thing's been running back and forth, and we just came out of that side. I wouldn't have any problem taking that trade. Then we failed out the top, but you could have taken that one again, but I'd rather wait on the lower high here, and then you're back inside, and you're just kind of going. But notice what happened here. You got a new high, first entry, and you got a second entry, and you're right off the support with a nice bullish bar. There's you another quick, easy one, and then the bottom drops out of it. And you run down here. And this was that second entry I just showed you on the other chart where it runs down and it breaks lower. Nice bullish bar. I marked it green. It's a little aggressive. There's even a higher low here. It broke lower and turned and went out the other side. It's right back into this resistance right here. If you drag your line over, then you can see it. But it actually, by the time it breaks higher, your buy stops up here, so you're back in there. Notice how it went right to the midline. If you drag that over and turn down, so the range is still kind of affecting prices. And it runs down, and now look how many times we find support across there. Count the bars. The only one that got through was a failure. And so when we drop through again, it's probably going to be a failure too. This one is black. I don't know if you can tell if that's black or blue, but it's black. And the reason was the signal bar. If you had a good signal bar here, take that trade because you're probably going to at least run back to the EMA on that failed breakout. And you're probably going to run to the other side of the range, wherever that turns out to be. And so that's an important low because look, you could have ridden that all the way. I would have at least ridden it back to this trend line and probably exited in that little congestion area right there. So But notice there is a lower high right there, and that is a second entry short too. Notice that low. Actually, that's not a new low, so that's not a second entry short. You're just in a range, but there is two little swings back, but you don't have enough room really to scalp out right there. Notice where it bounced and then went higher. Then you got a failed breakout on a second entry right here. And that's back up here at the other resistance. So if you had a good signal bar right there, I wouldn't be afraid to go short on that, just to ride it back to here. But it keeps on going and comes all the way back down to the lows again, where it bounces. It's not a second entry, but notice we've started going sideways again. It failed out the top, failed out the bottom. Go long on that, fell out the bottom. Then it fails out the top. If you had a little better bar, that's not a terrible bar, but it's not bearish enough for me, since we've already broken out once. But that's another one you could argue it to be green. This thing's getting long, so I'm going to run on. So this is in the middle. You got to be real careful. And then of course I demonstrated this trade. It's a second entry short. Go watch the video. It's posted. It'll be posted just prior to this one if you hadn't seen it. I'll probably put it on the website too. And then guess what? We start going sideways again. And I would have eventually moved this down to here. And so you got a little failed breakout, then you get a higher low. If you got enough room back to the highs here, you can take that trade. There's a little higher low here, but I wouldn't take it. Because we should have went on up there, and when you didn't, then you got to be worried that you got a midline. It's not going to go higher. But then it runs up to the top. You don't get a signal bar to come back. It runs back to the bottom. You get a nice signal bar with enough room. Go long. Fails out the top. If I had a good signal bar right there, I probably wouldn't be afraid to go short. That's a very neutral. That's a perfect doji, really. Runs down. And then it bounces right here. Here's another one. You could probably, if this would have been, actually this bar right here, if this would have been a bullish bar, you might go long right there. But notice how bearish it is. And of course, this one's bullish, but that's not your signal bar. So you got to have enough room to get out. Really, at this point, you're looking for up here. And if there's a midline, and there does tend to be a midline in there, so you don't need enough room. But that's not a problem here. It's just your signal bar is not any good. Then you drop on down and get a second entry, but again, no signal bar. You get this very bearish bar here, and then a bearish inside bar, and of course it does bounce and confirm that trend line, but you don't get a setup there. So you come back here and you get a first entry and you get a second entry. That bar is no good. That bar is an inside bar, but now you're right back into the resistance, so you don't want to be going long there. In fact, if you get a breakout, but notice you break out and you get a first, notice that low, it's a new swing low because it's lower than that one. So first entry, second entry, and this is an inside bar, but it makes a matching high, so you could use that. I wouldn't be too crazy about going short up here. I'd want a lower high probably, but I marked it because it's a second entry. Notice that's black, and it would have worked. You'd have had to probably, I don't know if you'd have got as big as that bar is. You'd have had to use the 8. You'd have had to do the expansion rule on your 8-tick rule. And if you don't know how to handle that, you'd be surprised how many people are putting their stop right in them. They'll take this trade and they think they know about the 8-tick rule, but they're not paying attention to the volatility change where we tell you how to trade that. If you can't get, actually it tells you, we tell you anyway, if you can't get in, your stop has to go above the signal bar if you're going short, and it has to go below the signal bar if you're going long. If you put it anywhere else, you're wrong, and you're going to get right here. This trade would have worked, but you'd have got stopped out trying to follow the 8-tick rule by not putting if you can't get in on the 8-tick rule, you either have to skip the trade or you have to take the difference. Go to the frequently asked questions on our webpage, and it explains to you how to do this. But if you just enter and ignore the rule of where your stop goes, you'll get stopped out of good trades. Please don't send me your chart and ask me why you got stopped out if your stop's not in the right place, which is 1 tick above the signal bar if you're going short, or 1 tick below the signal bar if you're going long. If you put it anywhere else and you get stopped out, please don't send me an email and ask me why, because It's on the website. It's in the manual. I've talked about it every day on the videos. It's there. All right. Here's UA long right here. And this is not a second entry or anything, but let me explain this. Notice we made that low. You came back and tested it once. You went higher and you came back and tested it twice. So it's a double test, and look how bullish that bar is. Look how many times that line held. 1, 2, 3, 4, 5 times, 6, 7. So the last 7 times prices came back to that bar, it held. It's acting as support now. If you got a double test and a good signal bar and enough room to get out before here, take that trade. And that got you into 2 o'clock. One of these days I'm going to get these things below 30 minutes back to 20 minutes, but I can't do it lately, so I've just too much to talk about, and I get to talking and the time flies and I don't realize it. But I'm at 50 minutes. It takes forever to upload these, so I'm going to wrap it up. I hate that I had to go through the trade so early, but I wanted to talk about all that other stuff first, and you still got to see the trades, and I explained them. And a lot of times people will ask me about a trade, why I took it. I explain every trade. If it doesn't make sense, listen to it a few times. And if it still doesn't make sense, you can send me an email. But don't send me an email just because you don't understand it if you didn't try at least to listen a few times, because it just creates extra work for me. And I've already get so many emails, and I don't want to. I'm not trying to discourage anybody from sending me an email. If you can't figure out something, by all means send me an email. But try to figure it out yourself first, is what I'm telling you, because I explain every trade here. If you've listened to it 4 or 5 times, just back it up a few times. If you've listened to it 4 or 5 times and you don't understand it, feel free to send me an email. But if you just listened to it once and you didn't get it, don't send me an email. Go back and listen to it a few more times and see if you can figure it out first. It would be helpful for me, and it would help you to learn something on your own, because that's really what makes you a better trader at this. So I'm going to wrap it up. Hope everybody had a good day. I got a lot of emails that people struggle today, and they thought it was an uptrend day, and they missed this range. And notice once we went higher, measure this part, and look where we went to. We actually pushed just a tad higher. So it's a range day, and it really started right here at the very open. That pretty much gave you your range right there, that one leg. And then we went a little lower than that, and we went a little higher than that, but that pretty much started the range. And anytime prices your EMA is moving sideways and prices are swinging back and forth above and below, even if it's got a slight uptrend, it's still a range day, because even this range had a little downtrend and then a little uptrend. And the uptrend went right on into the second part of the range, up to the high, a measured move, and then turned straight down back to the midline, and now we're working below that. So, and then we'll start working off this price action for tomorrow's chart. We won't even care about this anymore. So I'm going to wrap it up. We'll be back again tomorrow to wrap up our week. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.